Hi everyone, this is Michael Ben-Ghiat. This is the Stock Picks Weekend Review video for December 24th, 2022. I hope you're having a great long 3-day weekend and not thinking about the market so much. I think we have one more we're going to do this year, and of course we'll be back in 2023. But let's go ahead and just get started. There's not a lot this week. It's been kind of the same ongoing story. So we're going to go ahead and just go through the current market environment, the portfolio review. Actually, there is no portfolio review, so we could cross that one out. We don't have any positions. And then, of course, the watch list and ready list we'll go through. So again, we're still in a red stock environment. It's not conducive to buying stocks. We're in a bear market. I mean, that's in the end, that's what it is. We're just not getting a lot of setups. And for those that do go up, we're just getting very short-term trading. They go up for a few days and tend to crash. Our last position, we had a few-day pop. We actually sold twice into it and moved our stop up, and the stop got hit. It had a big crash the next day, which actually would have stopped us out completely if we hadn't taken any profits. And then it came rocketing back. So that's just typical action. We've seen that over and over and over. So that's where we were. And just really the last few days, of course, we're in front of this long weekend and Christmas, so not much was really happening. So let's just go ahead and take a look at some stocks. So the first one, this is on our long-term outperformer ready list. It's one of the only stock on it. And let's go. First of all, let's look at a monthly, because this is a little bit different than what we do if we're looking for our regular stocks. So first of all, we want to see a nice long-term uptrend, which we have here. Some of them are just really nice and smooth, but this one has been a little bit choppier here, but it's starting to give, after the coronavirus crash, it's starting to have a nice angle of ascent. We're getting some RS that's outperforming. You can see here, there's the S&P heading down, and this is heading up. So that's what we always like to see. So that's our monthly chart. So we want to always look at that. And then for the weekly, let's go to the daily first. So you can see here kind of choppy action. It's been it went to a base. Well, here we go. Let's go back over here first. We can't see all the cup because of the data here. I'd have to change the chart, but it'll go off the edge of the screen. So we had a little cup base here, tried to break out in typical fashion this year, didn't last more than a couple days, and formed another cup. Now this one, as you can see, just from the bottom of it here, this was a bigger cup here. Depth was 23%. That's acceptable, but we like the fact that this one formed, but this was only 19%. So a little bit tighter. That's always good. We're always looking for tighter action. Now this one, though, had a major flaw. And if you haven't been watching this for a long time or looking at charts, you may not notice it, but this one's handle was too steep. You can see here it came back down almost to the bottom third of the base. So that was a faulty handle, not to be purchased, and it came ripping right back up. In 1, 2, 3, 4, 5 days, we were actually broke above, but again, it was faulty. And then we had the sellers came straight back in, took it back down to the 50. Then we got an earnings, a real nice blast off. So, but you can see it didn't really hold. And again, this is something the market, you can see the S&P is this black line. It held here, but as the S&P started making new lows, it pulled this thing down to its 200-day, right to it. And you can see it just touched for 4 days, and it was able to bounce off the 200 on strong volume too. You can see down here. So this has been getting some support in a weak market. The institutions are stepping up and buying this stock. So you can see here we came back up out of just a sloppy consolidation. Nothing really that you would want to trade. Tried to break out, came back in, just couldn't really get anywhere. And now we've got a flat base forming on top of this previous base. Now, one thing we do like is happening here. So really, it just looks like a lot of chopping around and not much progress, which is somewhat true. But we do like the fact that all these bases are forming on top. And you see this in strong stocks that are being held down by the market. They just kind of grind their way higher, but then when they finally correct, they don't go as low as they did before. And then here you can see now we're coming down only to this level. So each one of these, and they were sort of, it tightened up, it was faulty. Then we had this bigger consolidation. Now it's starting to tighten up a little bit more. All really good attributes showing that this stock could be a real big winner in the future once the pressure from the overall market is let up. So what we're trying to do in this, we have a buy range of 172 to 176, which is right off of this the 20-week moving average. That's this green line. So we try to sometimes buy these, if we can, off of a moving average that's given support in the past. Now, of course, it's been a little trickier because of the bear market. You can see here that this line normally is held many stocks, including over here, but we had the coronavirus crash here that just broke everything. And we got a lot more volatility. Ultimately, this one over here, which is the 40 week, was able to hold. And then we came down again to the 40 week, and now we're starting to get support at this the 20 week. The only thing is that we're still in the bear market. So even though it's set up, unless you really love the company, we're just passing on it, and nothing's really working. So, but it's something we're watching. I mean, it is a buy spot there. You could buy this at support, and the stop would just be right below that. It really shouldn't go much below this price. So yeah, if you were to buy it, I'd say, let's see, we're at 170, 172. Yeah, so if you're at 162, somewhere around there, I mean, if it comes down to here, it's probably going to keep going down to the 200, and who knows, could even break below it. So, and I just don't know the percentage below. Actually, I can tell you right here. Let's see. It's 9%, 9.4%. It's a little too far for a stop because you'd want to have it below. So we're just holding off. But you can see it's one of the stronger stocks, and maybe it might set up properly. We'll buy it in the other, in our regular portfolio. But we'll see. So we're watching it, but it actually looks pretty good. Let's now go to our regular watch list. Now we have we added a few stocks here, so the list has grown a little bit, but it's just sort of a chop fest still. So here we have Iveric Bio. They develop therapies to treat the back of the eye diseases, and see we had a sort of a big cup here. A lot of volatility, which is why we're still watching this. So yeah, we had a couple of things here that we are positive and some things that are not positive. So the first is we had this big cup. That's great. Started to come back, but just came ripping right back. Now it actually went above its old high here of 1934. That's a faulty pattern that you don't want to trade. And this doesn't even look like it was on earnings. It must have been on a lot of these, because they're biotechs, they trade off of FDA news and other news like that. But this just came screaming right back. It was a $9 stock up to 21. That's a huge move. So, but you can see, so we wouldn't have purchased this, just there's nowhere to buy it. And, more often than not, you get these big pullbacks. And it came ripping right back to new highs, came down and just gapped up. Very, very volatile. But one thing we like, you can start seeing it's starting to quiet down and tighten up a little bit here. So you can see like this big move here came over here. Now this is a smaller move, and hopefully we'll come up. And we'd even love to see it come right back up to these highs, around 2380 or so, tighten up on low volume and then blast out. So that's what we're watching and looking for. It's a little bit on the risky side just because it's a biotech and doesn't have any earnings, as you can see down here. You can see it's lost money for the last 8 years, and it's projected to lose even a little bit more money next year. So but these can move quickly when they go. So we'll keep on the list. And also one thing, it's not too thinly traded, 2.8 million shares. That's actually pretty good. Next one is Olink. They provide human protein market products and services, another biotech. This one's on the thinner side, but it's acting really pretty nice, and it's not as volatile as the last one. Now, this one is actually just turned above its 200-day moving average, and the 50 now is above. So it's kind of what we call an early turn. If we go look at a weekly, you also want to come back and see, well, what's the stock done in the past? Now, if you go back a year ago, you did have the stock higher and it chopped around and then broke down. So there could be a little bit of overhead resistance as it comes up here. But when you get to about a year, it's starting to fade. A year and a half to 2 years, you don't really think about it anymore. So it is starting to come up here. So it's getting some good news. Again, not real world earnings, but it's getting some sales. Let's go to the weekly. You can see here that really not making anything in the earnings side, not projected to go positive on earnings. But the sales, you can see 13 million to 20, even hit 43, now 31. So it's got some action going on in their actual business, unlike many of these. So this one, it's come out of this little cup with handle, it's moved up into this little area here, and it's starting to tighten up. We're trying to buy it just above here, kind of breaking above this resistance right around there, as you can see. So that one looks pretty good. RS is 98 out of 99. That's very, very good. So we're watching that one. Next one is Array Technologies. There's been quite a few solar stocks that have been, I should say there haven't been a few, there's been a handful. Enphase has been really one of the leaders, though it's starting to kind of fall back again. This one is a more recent IPO. If you go to the weekly, you can see just came out in December 2020. In time for now you would have thought this would have blasted off because of the whole market was just going crazy then. But as most IPOs, they come out and then they end up crashing. This one's starting to come back. Again, there's still some overhead resistance, but we're going back a year here, so it's starting to fade off. So, but you want to be cognizant of that. So here we're looking to get it, coming out right around this old high here, 2290. So we're still kind of working our way up. So it's not really set up here, and we want to see that volatility sort of tighten up. Now, of course, in the holidays we might see really, really low volume, but if it tightens up, that would be really good. So that's when we're watching. The RS is 97. That's real good. They actually have some earnings that are starting to accelerate. 2021 we had only 4 cents. 2022 went to 34 cents, a big jump, and now we're going to 95 cents estimated next year. So really, really good. And they've got some pretty decent sales and earnings sales going on too. So that's something that we're watching. Next one is Cardinal Health. Ticker is CAH. Now this one is actually looking really pretty good. Now why would I say that? Because look at the tightening going up here. We're approaching the old highs. Here we had come up to 81, call it 81.50, big sell-off, came right back up there, couldn't hold, now coming back for the third time. But you can see here, the little wave down, a wave down, and then we're starting to get right at that price, but we're not going down anymore. I mean, no sellers are not appearing. And we have really good RS compared to the S&P, 97 rating. Earnings have been, just solid for a long time. It's not a real big grower. Let's take a look at the monthly. Yeah, it's the monthly. This is one of these stocks that really hasn't done much. If we go back to 2001, it was a $55 stock, and it's just an $80 stock now. So this is one that we may get a nice move. Now it's capable of making nice moves. Look at this over here in July. But this is really more of a trader. I wouldn't be looking to hold this for a long time, because I think if you held it for 5 years, you may not really make very much. So this is more, I think if we got a 20% move out of it, we would part ways. Next one is Calix. The ticker is CALX. They provide broadband communications access systems. Again, this one's starting to tighten up a little bit up here. Let's take a look at the weekly first. Now this one is capable of making a nice move. You can see here, we did have a big decline, but we've come all the way back, and we're really approaching the old highs from, let's see, when was this? From January, so about a year ago. So now this one, we're starting to, if it comes down much more and breaks below 61.50, we'll take it off the list. We want to see if it can just get support here at the 50, come back up, and give us some kind of a buy area. Now we do have a 72.62. It's a buy area. Let's see. So yeah, we're trying to get above, most of this. Let's see if I can draw the line. These charts are not great for doing these at the right spot, but it's kind of here. You can see we had come up. There were some days above there. Most of the action would be below this. A few more days here. Now it's not ideal because we have a few more days than we'd like, but we'd like to see it kind of creep up to here, and then finally tighten up there, and we would try to buy it. Overall, pretty good. 96 RS earnings. Okay, I mean nothing fantastic there. You can actually see here earnings and sales. Earnings have been kind of negative. Sales have been pretty strong. It's not one of our, but the industry group is 13 out of 197. So the money's been flowing to this. We've seen a couple other names that have been in this same group, but it may not be one that you're going to be holding for the big move. Here's a new one that we added on, OI Glass. They make glass containers for the food, beverage, and pharmaceutical markets. Now this is a defensive stock. Let's take a look at the weekly. Yeah, again, not really a lot of big moves going on here. Looking at a monthly chart, just just a chop fest. So we really not one we expect to make. It has at times this can really just crank. This went from 12 to 60, five-fold move. But it's not its normal modus operandi. It's more of a chopper. But we're getting a pretty good move here. We'd like to see if we could break out above this area here. We have a buy at 1702, which is just kind of breaking right above this resistance here. You can see at this point. Let's see if I can draw the line here. Yeah, close enough. If we get above there, we're really not getting. There's really not a lot of days it's been above there. So we want to see if it decisively breaks above this. That would be a buy. Again, the RS number is good, 96. The line's heading up. We had a couple days high volume selling here, but it got support at the 50. Yeah, I mean the earnings and sales are nothing to write home about. So, but this is what we're getting. We're in a bear market. Sometimes some of the ones that we're coming up are just not the big movers that we would like, or to have big earnings and sales, but that's what we're given. And we have one more, Strategic Education. We just added this, a little bit of a thin stock. Let's go to the monthly. Yeah, it's still trying to recover from its 2020 decline. Weekly, yeah, it really just almost like a giant cup. It looks like it's going to be forming. Nothing wrong with that. Sorry, we'll go back to the earnings here. You can see just negative earnings though, and actually declining. So not a great, but it could be a turnaround. We do see it's supposed to turn up, have a 30% increase over 2022 next year. That could be what the market's starting to discount here. We had some nice institutional support here on this day. And if you look back, you haven't really seen a lot of institutional support for a while. So that's a good sign there. Let's go back to the daily chart. And yeah, we're looking right around just to break above right here. See if I can draw the line. Yeah. So again, you can see that we want to see it tighten up. It had started to do it here, but now it kind of broke down a little bit, came back up. So we'd love to see it just real tight in there and then bust through there. That would be it. The highest it's made in a long time. So it's looks pretty good there. And we have final one more on our long-term outperformer watch list, and that's ticker is Expo. Now, Exponent's the company. Now, when we look at a monthly, this is a chart that we love. This is a fantastic long-term chart. And again, this is something that, if you had got on board one of these stocks in 08 or something, it really never would have shaken you out much. It just kind of kept going up. So this is what we love these. These are easy to hold. So that's why we try to find these. And there's less of them than there used to be, especially now that we've had so many of them have just bust open, especially if they had to do with anything to do with tech. So here we're trying to get it right at the, let's go to the weekly. Yeah, so I think on this one, let me see where I was. Yeah, we're trying to get above this recent resistance here and buy the breakout into this area here in the blue. But we're starting to break down a little bit. You can see that rather than, the volatility is going like this. We call this a megaphone effect. So that's not what we want to see. So we're still holding it, but we're starting to break down. We're down now. We got down to the 50 and the 200 day, coming back. So that's why it's still on the watch list. We'll see. It just may not be one that we end up ever getting. There's a couple other flaws too. Here you can see we had a cup with handle here, which broke out and of course failed, typical in this market. But look at this cup. It's actually lower than the previous cup. That's another flaw. Broke out, failed. Now this one's a little higher than the bottom of this one, and it's also a little bit tighter. We like that. But here we had a little handle, nothing wrong with that. But we also like to see these overall higher than the previous one. So this is really a little bit of a warning. And then it broke out only for a couple days and came in. This is what we've seen this whole year over and over. So if you had bought this little breakout, which was actually okay, you had 2 days to take your profits, and then you would have probably been stopped out. You can actually see went all the way down to the bottom of the loss zone here, which is 8%. So you probably would have been kicked out, and then just see it come, rallying back for a few days. So that's and the earnings and sales are just okay, but which is surprising because you think a lot of times you'll see these with just nice steady earnings, maybe a little higher than the single digits we have here, and the sales, they're just floating around 10%. So long term, this looks really good, but we're starting to also live down here at the 40-month moving average, which at times we had come down and hugged it. Here you can see in 0809, just kind of held that for a couple years and then was off to the races again. So we might be doing the same thing here since we're still in a bear market. So those are sort of the best of what's out there. None of them are really like we're just excited to buy them. Like, oh, this is really just a major winner that we're seeing with all the characteristics of big winners in the past. We're just not getting a lot of that yet, but we will. So we'll wait and see. Anyways, that's it for this week. We will just we'll be back next week for the final video of the year, and we'll see what 2023 is going to bring. I think at some point we're going to probably see the end of the bear market, and we'll really start to be able to get excited about the merchandise that we're seeing and the fact that we're going to be able to buy stocks that go up and stay up. Okay, well, we'll be back next week. Okay, hope you have a great 3-day weekend. Thanks. Bye-bye.